Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade you take. No one trade is guaranteed to profit. So you want to manage risk in a way that makes sense for you. And we'll go through some ideas in that regard with some of the tools that are built into our web trader and app that make the risk management side of things quite a bit easier. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader, which allows you to trade on both MT4 and MT5 accounts with the advanced functionalities and tools that we offer in our app and web trader. And the same tools you see in the web trader today are also available in our app, which you can download from the major app stores. And there are also links to those app stores on our website here to get the AvaTrade app. So if we log in the upper right corner here from our website, we'll be in the web trader version of our platform. And you know, today's a focus for fundamental analysis, but also it makes sense we'll maybe look at some technical analysis along with it, because really the two go hand in hand. You know, the fundamentals a lot of times help you determine what direction you want to trade, and the technical analysis maybe helps you zero in on entry points and exit points, maybe confirming whether the momentum you think is in the direction that the fundamental news says it should be, etc. And so we'll go through that process maybe with some examples today. Now, a good place to start would be on the economic calendar for fundamental news. And this is something that really you can prepare for over the weekend even, for the upcoming week, to know what announcements are coming and which ones you're most interested in maybe trading off of. And so if we look at the economic calendar, what we'll see is that there are some tools built into AvaTrade's economic calendar that allows you to do some data analysis from past announcements to get an idea as to how you think the movements might go on different currency pairings with the current announcement, depending on how the numbers come in. And so let's go through some examples of how you might do that. If we put today's date, we'll look at today first, and you can pick the countries you want as well, and the level of announcement importance that you want. I kind of leave the low important ones off. The medium to high importance level tends to have announcements that move the prices a bit more, get a little more price action on the charts to be able to trade off of. Now, if we go through a number of announcements that have come in today already, but we can find some that have not, and so then we'd be already past some of the European, UK announcements and looking towards the US or Canadian announcements. Now, coming up are some inflationary data points out of the US. In this case, it's the PPI data, and basically it's the purchasing price index, the producer price index, to show how is inflationary, what's the inflationary situation for those who make the products that then the consumers buy. And you know, if the producer price index is higher than expected, then many times that follows with inflation on consumers as well, as you know, producers are going to mark up prices to cover their costs when they sell the products they're making. And so this is one of the set of inflationary data points that traders look at, that economists look at, to see how is inflation doing these days. And what we saw yesterday out of the US with the CPI data, the consumer pricing index, is, you know, inflation's not dropping maybe as fast as would have been ideal. It's still sticking above the rate at which is the target. And so the CPI data came in at expected levels, which was, it didn't go down from the prior month really. And the year-over-year numbers are still showing inflation higher than the targets. And so maybe PPI data could come in the same. Yesterday's numbers were kind of not a big reaction either way because they came in at expectation. Now, the expectation here is that the PPI numbers will actually show an increase month over month. Okay, that's an increase in inflationary cost. And also year over year, it's expected to tick back up over 2%, which is not really what the Feds in the US are looking for with all the rate hikes that occurred to try and bring down inflation. And now they start to lower interest rates. And what happens? They expect inflation now to start ticking back up, which really is not a good situation if you didn't yet reach the target inflationary rate that they're shooting for. Because goods are already expensive, and if inflation goes back up with the rate cuts, that could signal bad news. But we'll see. There's a focus on these numbers for the reasons I just outlined, and so let's see how they come in. Now the question is, what effect has it had in the past? If this comes in higher than expected or lower than expected, what could we anticipate the movements would be on the charts? And so I can bring up, say, year over year PPI data. I can look at the past announcements and see on the currency pairing that I want to look at, any USD pairing here because it's a US announcement. I'll leave it on Euro USD, and I can look at different time frames after the last announcements, anywhere as little as 5 minutes after those announcements and up to 4 hours after the past announcements. What direction did this currency pairing move in that time frame after those announcements came in for PPI data? And I can qualify how the numbers came in. So if they came in above forecast in the past, what happened? It was a 50-50 move. Okay, half the time the Euro USD went up over the 4 hours after the announcement, and half the time it went down. This data set doesn't convince me that I would want to trade on the announcement if these numbers come in above forecast, because the past shows me that it was just an unpredictable movement. Went up half the time and down half the time. It ranged 40 pips, which is nice, but predictability here is 50-50 from the past. What if it comes in below forecast? Okay, now we see a trend where if this came in below forecast, and even more recently, stronger move than this one here, only once did it go down, the Euro USD pairing, when these numbers came in below forecast. So if the PPI data today comes in below forecast, showing a slowdown in the producer price index, meaning inflation is lower than expected on this data, what we see is 75% of the time in the past when that happened, the recent past, the euro climbed significantly against the USD, meaning the USD weakened with that information. And that would make sense, right? If it shows things are slowing down more than expected in the US, that means they're more likely to say, okay, we can cut interest rates further then because things have slowed down. Less fear of inflation, so they could cut interest rates further, and lower interest rates tend to weaken a currency. So the worse these numbers are, the lower they are, I should say. Some might deem that good news, so maybe I shouldn't use the word worse. The lower the numbers are, the more they're below expectation, the more we see a trend that the euro gains against the USD, that the USD weakens in the hours after the announcement against the euro. Okay, and that might make logical sense based on anticipation of what that might mean with rate cuts. But regardless of how you work that out in terms of theory, the data doesn't lie. 75% of the time, if this came in below forecast and you bought in the hours following that, you'd have been a winner more times than a loser. Okay, so in this circumstance, when this announcement comes in today for the year-over-year data on PPI, I would only be interested in trading if this comes in below forecast. And in that case, I would be buying on the Euro USD, looking for a range movement near 32 pips in the several hours following the announcement. Okay, and in the first 5 minutes, we can see the movement was 50-50. Half of them went down. The average range movement was only about 10 pips. So it's not like you don't have time to place the trade after the numbers come in. Okay, the biggest movement up was 14 pips. Most of them were either down or up very little in the first 5 minutes. And then after 4 hours, we see a significant climb, 22 pips, 35 pips. The smallest one was 4 pips. Okay, and the biggest drop down was about 13, 14 pips. So a lot more winning than losing. If you get the entry point, even that in the first 5 minutes it actually went down a couple times, you actually might have won on all of those 100% of the time. And so this is a way that you can trade, not by guessing, not by having a feeling, but by looking at the past data and understanding the timing of the movements in the minutes and hours that follow a major announcement, and also understanding the percent probability based on the past that maybe you can try and predict in the future which direction this would go based on how the numbers come in. In this case, I'm interested based on this data more strongly if this comes in below forecast to buy. If it comes in above forecast, I don't see it. 50-50, it doesn't tell me which way to trade. And if it comes in matching forecast, also 50-50. Okay, so the statistical advantage is found when it came in below forecast. 75% of the time climbed up. So that's just one announcement that you could be ready for. And again, like I said when we started out with this, you could do this over the weekend and have your schedule written down. PPI data year over year out of the US, have the time written down for your time zone. You know when the announcement will be. You write down your plan, only trade if it comes in this example, below forecast. I'll buy on Euro USD if in the first 5 minutes it's up less than 10 pips, or I can catch a spike down and I'll get out within 4 hours if it gets to 30 pips or for range movement. Something like that. It doesn't have to be exactly how I just described it. It's more of an art than a science, and you can come up with exactly how you interpret that data. But the point is, you can have a plan for these announcements ahead of time, and then act without emotion being involved. And your trade size can be based on the amount of risk that you, in advance, have already calculated you want to take. Okay. And we can look at some other announcements. There are jobless claims numbers coming in out of the U.S. We can go through examples on a lot of different announcements. Fed Chair Powell speaks tonight. Those are harder to trade on because there aren't numbers. This is a speech. So it's not like you can see the number come in and react. It's a speech and you have to listen to what he's saying. So these are a little bit harder to do that strategy on if it's a speech. But you certainly can check and see that there's volatility when this person speaks, which is what you'd see, that there are movements, but it's kind of 50-50 up and down. I already checked it. Okay. Now, what about tomorrow? You have all day tomorrow to look at announcements that can be coming in through the day. And I scoped some out that really look like they have some effect. I believe the GDP year over year out of Great Britain had some predictability to it. If we look 4 hours after the event, if this comes in above forecast, 21 pips up. If it comes in below forecast, 26 pips down. Okay, it looks like a small move, but that's actually 26 pips. The scale looks funny here. It looks like it barely dropped, but you can see average range movement 26.5 pips. So some of these are predictable, but you don't have a lot of data points. Most of them come in sometimes matching the forecast. In this case, if it matched, it went up. So when this matched or was above forecast, it went up. And when it came in below forecast, it did not go up. It ended up down. So you see a clear difference there of rising if it matches or exceeds the forecast and dropping if it comes in under. Okay. I saw some with maybe a little better statistics here. The retail sales month over month out of the US are largely a focus each time this data comes in. Retail sales give a good look as to the health of the economy. And so if we look at, if this comes in above forecast, 86% of the time the USD strengthens. Makes sense. Retail sales come in stronger than expected. That means there's good demand in the US economy. That strengthens the USD. 86% of the time when this came in above forecast, the USD pulled the euro down in the 4 hours after. And we're talking near 50 pip range movement. Only one time did it go the otof way. That's a nice set of data to make a decision off of. You also can look and say, what if it came in below forecast? Well, it's the exact opposite. 60% of the time it went up. So the majority of the time it went the other way when it came in below forecast. So this is a really nice data set where you can actually plan to trade either direction depending if the retail sales come in above expectation or below. Okay, and you could get an idea, okay, after 4 hours, it went 50 pips almost. What about the first 5 minutes? They all went down, but only 20 pips, 19 pips. So the trend was there initially, and it continued over the 4 hours, just a further range movement in the end, with only one that reversed and went the wrong way. Okay, so that in general looks like a strong data set. We also could look at industrial production out of the US, which is then later on in the day. And if this came in above forecast, USD strengthened just like the retail sales. If the industrial production comes in stronger than expected, the USD strengthened over 80% of the time. Only once did it not drop, pulling the euro down. Only once the euro went up against the USD when the industrial production showed stronger than expected in the US. So again, it might make sense in your mind, yeah, the US should strengthen if the industrial production is better than expected in the US. And indeed, the statistics tell you that. In the hours following, 83% of the time the USD would strengthen. So if in the first 5 minutes you can catch a spike up, 1, 2, 3 times it went up in the first 5 minutes, after 4 hours, 83% of them were down. And the one that went up barely moved up. Okay, so these are statistics that would have me be able to have a plan that, hey, I want to trade on retail sales, depending if it comes in above or below expectation, I'll trade accordingly in both circumstances, and the same with industrial production. Really strong set of data there from the past. And each week there are announcements out of different countries, European Union countries, UK, Canada, US, Australia, etc., that you can, like I suggested over the weekend, go through the week's announcements and find the ones that look the best to you to make a prediction on based on how the numbers might come in. Okay, let me pause for a moment. Any questions, comments before we move on to a different area, a different tool set for fundamental analysis and trading strategy? I'll pause for a moment. Okay, if I see any questions pop up, I'll address them as I see them. And keep in mind, these types of announcements many times create a movement over those few hours after the announcement that may or may not continue, right? Because there are larger scale fundamental things going on as well, like war in the Middle East, like the US elections, etc. Okay, so these are short-term type moves off of these announcements. These aren't movements that necessarily could be expected to carry the entire day or through the week. Sometimes they do, depending how significant the data was. And if it was really worse, much worse, or much better than expected, sometimes the effects can linger. But many times just until the next set of data comes in, that then becomes the new focus. Okay, so where else can we look for fundamental news, fundamental analysis for trading? And one place we can look at also is the market buzz. So if I go into the market buzz, I might have in advance some instruments that I'd like to trade on, that I'd like to see what is the latest news, what's the latest trend analysis. And for instance, you might say Microsoft I'm interested in. And by the way, the bigger the circle, the more it's trending online, the more information we found about it in terms of articles and mentions in social media, etc. And so here's Microsoft. It's trending quite a bit. Maybe this is something you decided you wanted to look at. You see right away a trend analysis that the folks over at Trading Central believe that this should rise in the near future, near 7% or a little over 7%. You can see the technical breakdown here when you click on the trend analysis, the price levels where they think this might move to, where the support level is, where they say if it breaks to the other side of the support, that then you might think to sell. That's all explained here in the trend analysis, okay? The basic setup here is a pivot line that if it stays on one side of the pivot line, then the trade is this way. If it breaks to the other side, that establishes a downtrend, breaking the support in this case, and then they say that you look for further dropping towards these prices. So a pending order below the pivot line to sell and a market move here to buy is what would make sense with that signal. And currently they're saying the market move is the expectation, if it doesn't break that support level below, the expectation is that this would rise. Now you can have different reasons in your mind as to why that might be, okay? The Trump administration coming in with promises to lower corporate taxes, promises to cut regulations on the energy sector, on the tech sector, on the banking sector, etc. And so all of those might be reasons why Microsoft might be expected to rise here according to this trend analysis. But you also could read the recent articles. These articles are in this newsfeed because they have something to do with the instrument that we're looking at, in this case, Microsoft. So you can go through and read the articles as well to see what's here. If I click the article, the link, I can bring up the entire article and read it if I wish, okay? So you can find news on whatever instrument you're interested in quite fast in an efficient manner by using this tool. So I'm looking at Apple. Well, Apple's expected to drop. It's in the tech sector. Microsoft was expected to go up. Here they're saying Apple's expected to drop. Here's some articles. Apple faces $3.78 billion lawsuit over alleged iCloud practices impacting 40 million customers. Okay, that might sound like bearish news. So maybe you read this article. Here's a summary of it, and you also can click and read the entire article. There's the article. You can read through it and make your mind up for yourself based on the real information. Do you think this is news that could bring Apple downward, at least temporarily? And then you say, on top of the articles I'm reading, if they make me think I should sell, then I see a trend analysis that's also predicting from a technical perspective that it looks like it's in a downtrend and that it might drop to these price levels down here. As long as it doesn't go above the pivot line, this is a sell signal from a technical perspective as well. So you start to put the different tools together to say, okay, I trust this signal maybe more than other signals because there's fundamental news to back up the technical direction as well. And so you combine the fundamental news from the articles that might be bad news in this case for Apple with the technical prediction and downtrend that it's expected to drop 5 or 6% from what they're saying here. And then maybe that convinces you when the US market opens, if there's an entry point I like, then I take the trade, okay? And so it takes the guesswork out of things by doing your fundamental analysis in advance, whether it's with the economic calendar strategy that I showed you that helps you trade on the past data based on how the new data comes in, or an analysis like this where you're reading news articles that have come in most recently paired up with something like a signal or a trend analysis. Okay, so a lot you can do here. And one thing I found interesting recently is with Tesla. You know, the Trump organization now, I shouldn't say organization, the Trump administration and their platform of the policies that the Trump presidency will bring, it's pro-fossil fuels, pro-energy with drilling and fracking and all of that. It's interesting that Tesla, which would not benefit from that, Tesla would benefit from a focus on green energy. Tesla actually went flying up with the election results, maybe more because of the anticipation of corporate tax cuts, that sort of thing. But also Elon Musk has got a connection with the Trump administration now as well, so maybe that had something to do with it. But anyways, it's still a strong prediction to rise, plus 28% expected climb. I mean, look at the expected price movement. There's got to be something to that as to why the analysts at Trading Central are expecting that kind of rise, even after a pro-fossil fuel administration won the election. And so you can read some of the articles recently to see, well, what's going on with Tesla? And do you agree based on the articles that you read with this technical prediction? And again, that can help you make up your mind which way you want to go with a trade on something like Tesla. Okay, so tools to really simplify your ability to put together pieces of information from fundamental news and technical analysis as well to make an informed decision what you want to buy or sell on. Okay, it can make it very simple for you. If we want to bring up an example of something that's moving quite a bit right now, we could talk about gold, one of many instruments moving a lot. And you might think, okay, why has gold been plunging? And one answer that I might have, and it's speculation, right? But why is gold dropping ever since the election results? Well, gold is a safe haven a lot of times. And if the election results caused the stock market to surge up to all-time highs, which it did, the Dow Jones had a ridiculous run up with the election results, like 1,300 and something points. The biggest single day rise, I think, in a long time, maybe almost ever. And that optimism in the equities and the stock market means fear was down with the anticipation of deregulation, rate cuts coming, deregulation coming, and pro-business policies, including corporate tax cuts. All of that helped drive the equities up with the election results. Wouldn't that then also, since it's decreasing fear, cause people maybe to sell out of a safe haven like gold and buy the stocks? So that money was coming from someplace as the stock market surged up, and not just US markets, all around the world. Where was that money coming from? Maybe some of it was coming from people who were holding gold as a safe haven. And with those election results, they said, time to sell gold. Now I'll buy back into the stock market. It could be. It's just one idea of where a lot of that money came from to drive the indices up to new all-time highs as gold came pulling down at the same time. Okay, so it's not a surprise to me that a safe haven would drop drastically when there's a lot of optimism that hit the markets. So one-day candles we can see. Okay, it's been pretty much a nonstop drop with a day or two in between since the election, but we see 1, 2, 3, 4, 5, 6, 7, 8. The last 9 days, tremendous drop in gold. Okay, what's it been, about 8, 9 days since the election, right? So that this drop corresponds with Trump winning the election, and also would be the flip movement that we saw from the major indices, which went up with that type of momentum. Okay, now we start to see maybe the excitement's capping itself. Maybe the indices aren't climbing so fast anymore and starting to have some pullbacks here or there. So maybe gold has found a support level down here, and at this point could be an opportunistic buy from a technical perspective, because it's quite a bit of dropping really in a fast time frame. And many times the faster something goes in one direction, the more likely there is, at least for a temporary pullback, in the opposite direction. Doesn't always happen, but this looks like a nice support level here. Now you can start to think about fundamentals. Okay, that's what this webinar is about. Technically, this looks like a nice buy. Nice support level that it's bouncing off of right now. You can get your stop loss down below that support level where it had trouble breaking multiple days. And then once it went above, it became support here. And now it's respecting that again and bouncing. So small risk to go after a much bigger profit if you think this might push back up towards maybe a spot like this support level here, which was an old support level. And so what we're looking at here then is small risk, much larger potential profit, even if you take profit before it would have to break this old broken support that might act as resistance here if it goes back up. So what's the fundamentals behind this? Why would you buy fundamentally? There's expected to be rate cuts, right? The US is promising more rate cuts even before the end of the year this year. What happens to the value of a currency when you cut interest rates? It tends to get weaker, which then causes inflation. What happens with demand for gold when there's fears of inflation? Potentially, gold might go back up. And if the US dollar is weakening from rate cuts or from anticipation of rate cuts, then also gold is paired against the US dollar. It could climb back up easier. So there are some fundamental reasons why you'd say, not to mention potential war still in the Middle East, which could create a run towards safe havens like gold. There still is war, the potential, I should say, for escalation of war. And so there's reasons fundamentally why you might say gold might have trouble breaking this next support level. And if that's how you felt, then this is an easy technical move, because the technical setup is a great buy from an opportunistic standpoint, right above a major support level. So take profit. Let's say you're not being greedy, you take it before even having to break this broken support level price. So at 26, say 45, being conservative with the take profit, 26.45. Just has to go back up where it was a few days ago without breaking back above this broken support, I should say. And the stop loss just needs to be below here to be below the support level. So we're talking 26, or I mean 25, let's say 28, something like that. Okay, so I can draw the lines. 25, 28 is right there for my stop loss. Maybe I take it down just a little further, 25, 25. So I clear that support level by a little bit more. Okay, and the take profit then setup is a little bit better take profit amount than what I'm risking to the stop loss. Okay, so now the question, or I'm saying a lot better, we're looking at 34,000 potential profit compared to less than 8,000 risk. So we're talking better than four times the potential profit compared to the risk. Okay, almost 5 times. And so now we just need to adjust the trade size to be the amount of risk you're comfortable with. So if I do one lot, I'm risking 2,300. If I know I want to risk, say, 1% of my balance, and you can risk the amount that makes sense to you, then I change the trade size until I see, okay, that's just under 600. 1% of my balance is 600 if I have 60,000. So I'm risking less than 1% to try and make over 4%. Okay, better than 4-to-1 ratio here. And if I like that setup, and I could even go a little bit larger with the trade size and still be around 1% risk. Okay, and so I'm looking at over 2,500 potential profit with risking less than 600. Okay, so I set that trade in motion. Technically, as I mentioned, it's an opportunistic setup, buying from above a support level that should work in my favor if the support level holds. And I only have to risk a small amount to get below that compared to the potential profit, which is about 4 times the amount I'm risking. And I only need to retrace back up to where it was a few days ago without even having to break back above this resistance level, the old broken support that would act as resistance now, according to support and resistance theory. Okay, and that was a good demonstration of how the platform can help you with your risk management as well. Once you have your entry prices outlined, then as you adjust the trade size, you see how much you're risking until you get the trade size that makes sense for your risk tolerance and your profit goals. Any questions on anything we've gone over so far? I'll pause for a moment again. Okay, great. I must have been pretty clear. I don't see any questions popping up. Well, thank you all for attending. This is a good place to stop. I know there's some announcements coming soon that maybe you want to get prepared for. Really, there have been some great movements on the charts with a number of different instruments. So I think you can take advantage of some of the recent fundamental news, like we did with some of the examples here. And those announcements that are coming in on the economic calendar, maybe you take a shot at trading off of the past data and the strategy ideas that we went through at the start of this session. Good luck with your trading. And my next session will be next Wednesday, 5 p.m. UK time on Wednesday. Okay, that's the technical analysis webinar where we focus a little stronger on the technical side of things. And you're welcome to attend that. And by the way, all of the sessions are recorded. And so you can find, if you can't catch the sessions live, you can find them on our YouTube channel by the next business day. All right, everybody, thank you for joining and good luck with your trading. Bye for now.